The Fed announced its latest QE, not QE program.
So let's not kid ourselves. It is money printing in the sense that the Fed is using newly created dollars created with a keystroke in order to buy treasury bills. They're not buying duration. So as a result of that, they're claiming that it's not QE per se. It's kind of a semantic, distinction without a difference because it really is very similar to QE. They are increasing their balance sheet and increasing the stock of money in the system. Instead of calling it QE, they're calling it reserve management. And it's because the plumbing is tight. Those of us who are in the Bitcoin world and all the people looking at the monetary system understand is that you cannot continue to grow debt without growing the underlying money supply, or else you don't have enough money to service the debt. Again, if you do not grow the money supply, how do you pay the interest on the debt? We saw the repo blowout, which led to what I'm actually calling this the second Powell pivot, because the first Powell pivot is they were tightening in 2019, and then we had a repo blowout and spike, and that was based on the reserves in the monetary system getting too low, and that led to a reversal of tightening in quantitative easing, and then of course not long thereafter the COVID hit, and then we got what truly was the second of the big prints, the first being in 2008. And it's interesting, this one, Lynn and I have had friendly banter back and forth on Twitter. The second one, the COVID one, was much more aggressive, and they went from 3 some odd trillion on the balance sheet to 9 trillion at its peak. It's come back down to into the sixes now, but and that was a much more aggressive big print. And she's right, we really are kind of gradually printing. It's just a shift in the tides from tightening to printing, and it's just crossed the $1.2 trillion annual rate, which is really a rather stunning number. And so that makes it larger than everything except Social Security. It's larger than defense, larger than Medicare. And okay, you can do that, but the natural outcome of doing that will be monetary supply growth. And, and as a result of that monetary supply growth, we'll see inflation. So
Yeah.
Bitcoin sadly has not gotten it. And Bitcoin actually is much more, so gold is reflective of monetary debasement, always has been, always will be. Bitcoin's a little bit reflective of monetary debasement, but that's only the real hardcore maxis that get that piece of it.